We are back. NSE has just closed. Nothing much has changed from the stats that we had shared with you earlier. Looks like turnover could potentially be 10% lower than what was happening yesterday. Key to watch out for: CFC, Stanbic, top trade, foreign seller, local buyer. We are talking about the real estate sector. What has happened in the first half? Beatrice, before we took a break, we had done an extensive coverage of the commercial sector. Let's look at the retail sector. Ian from our graphics team can put up the chart just to show the trends and the asset yields that have been experienced over the last 12 months. Tell us what's happening with the retail sector, both in Nairobi and in other satellite towns.
So for Nairobi, the retail sector recorded a slight, not a very big decline in rental yields from 9% to 8.2%. That is 0.8% decline in rental yields over the first half of the year. And this is mainly attributed to oversupply also in that sector.
Okay.
Not as huge as the commercial office. So for this one, it's just 2 million square feet of retail space in excess.
Wow.
So that means the occupancies have slightly gone low, and that has made the rental yield also come slightly low.
Okay.
However, we still have markets that are doing well. Looking at Westlands, we're also looking at Kilimani with rental yields of above 10%.
Wow.
And this
So
is
you can see
mainly
Westlands is at 12% on the chart up there. Kilimani 10.5.
10.5%. Yeah.
And I think these are well above your commercial rates. I think we're at 7.8% on
7.8%,
average.
yeah.
Wow, so these are fantastic yields.
Yeah, and the main factors driving growth in these areas is mainly their affluent neighborhoods.
Okay.
They have they host the high class or the high and middle class population who have a higher purchasing power, so they're likely to utilize these retail resources, and so there's more demand for facilities there because there's high demand for supply of commodities
In this spaces.
in these spaces. Yeah.
At these rates, 12%, do you think this could be a yield that one could see maybe 5 years from now? So if I wanted to buy a house, would I then focus the yield in the areas of Westlands and Kilimani above 10%, and would that remain over 5 years, you think?
If you even look at the trend, even if the market has declined, even for Westland has declined slightly, if you look at the rental yield, the previous rental yield, it was also around 12%. So these are areas that have been performing well throughout the years, so we don't expect to have so much drastic change even in the next 5 years. They're likely to stagnate given the the oversupply, not very high oversupply,
Okay.
but also the tough economic times. They're likely to stagnate, but we don't expect to see a decline in their performance.
Very interesting.
Yeah, I think for me there's some key takeaways. I think there's some anomaly that I'm seeing here, to the extent that prices come down, rents are slightly staying flat. I think for me that's an anomaly. It shows the nature of the opacity in price discovery. And I think for me, I mean, which is next time, I think is, can we also have the actual prices, for instance, instead of asking prices? Yeah.
We can just try get that.
It's a matter of education, you know.
Okay.
Because anybody could ask anything, you know.
You could ask for 2 times the
I
price.
could ask for the time-to-time price. Asking
And the
price is
strike
not
price.
very representative sometimes.
But you see, the current
Yeah.
prices, and that's what the market is offering at that moment.
Yeah.
So you're able to get the current price at that moment. When you're doing this report, so I can tell you this report is very useful at this point because these are
Very.
actual prices at the
Yeah,
moment.
no, I'm not disputing the usefulness of the report. It's an excellent one, by the way.
Thank
But I'm just saying, can you also put the lease prices? For
Okay.
instance, if I signed a rental lease, 2-year rental lease, is it possible to put that instead of just putting ask
That's true.
bid prices? Probably we'll have a more clearer picture. But that aside, I mean,
Yes.
going back to my discussion, I think that there's a whole opacity around. I think price discovery in the market needs to improve, and I see that in that mismatch between the growth rates in house prices, the general property prices, and rental yields. But because I mean, the Insurance Regulatory Authority has just issued some guidelines. They're calling them capital adequacy guidelines for 2019. It's a revision of what they gave in 2017, and they've introduced a very interesting element. They've introduced property risk charges for insurance companies, such that if insurance companies are holding property, in fact for land they put at 40%. So there's a capital charge on land for 40%. There's a capital charge on investment property at 30%, and there's a capital charge on REITs for 30%. Now, what this means is that it's very expensive for insurance companies to continue holding properties and land in their books, because they have to reserve 40% of 30% of the value of that. So we will see some of the insurance companies either transferring those properties to their life business, or some of them selling them off. And we've already seen, like for instance, CIC is selling. I saw something on WhatsApp that even Britam is putting up some property for sale. I don't know the authenticity of that.
Okay.
Yeah.
Interesting.
But essentially, we are likely to see a number of the insurance companies offloading some properties, especially land. You think this is going to make the market worse by exacerbating supply?
I really don't think so.
You don't think so?
I really don't think so.
The market can absorb that.
It can
Yeah.
absorb that.
Yeah.
Okay.
That's very
Interesting. But you know, I mean, Beatrice, you're a real estate analyst. Have you ever looked at fixed income and equities, or at least can I assume that you sit with people who look at the returns in these other asset classes?
That's not my key area of
That's not your
focus.
key area.
Yeah.
Okay, because this week we have been talking about the ongoing sale of the 15-year bond. So 15 years and the government is going to give you, everybody thinks maybe it will be 12%, give or take a few basis points. And then I'm looking at the rental yields here for Westlands at 12%. So I'm wondering then what happens if I have 5 million shillings? I could either put it in Westlands at 12% and I don't know what's going to happen. It could potentially come off.
Yeah.
And there's a risk to whether something could happen. It's a higher risk compared to government at 12%.
Yeah.
So I can see the element of oversupply when you say you have 2 million extra units that are in this space. But in your analysis, do you ever capture the element of complementary demand for money? Because there's this 5 million that could go to real estate, but it's the same 5 million that could go to equities, or the same 5 million that could go to the bonds. Would that be something that would potentially hold rental prices up there in your analysis?
I think the performance of the other asset classes, then there's that pull from either side.
Yes,
It
okay.
depends on how stable each side is.
Wow.
So I think that when it comes to diversification of your portfolio, then you'd look at other asset classes, maybe not concentrate mainly on real estate, but also look into other asset classes, how are they performing,
All right.
and how volatile are they, and
Okay.
then see where to also focus on.
Oh wow, but I mean, I think this data is fantastic, because for any
Yeah.
investor, as you said, when I'm
Yeah.
looking at my portfolio,
Yeah.
I'm coming from a point of knowledge and I can see what
Yeah.
the yields are.
Yeah, but I tell you what, you'll also not get an apartment in Westlands for 5 million shares.
How much will I have to pay? It depends on
Yeah.
how old it is.
Yeah.
It
Yeah,
depends.
5
The
million
older
shillings,
ones.
can you?
Okay,
You can
8
get
million.
5 million
No,
shillings.
I have
Well,
seen
8
8
million
million.
shillings you'll not
Where,
get.
where do you walk?
Which is
Who
a-
are your friends?
Which is an apartment in Westlands.
I have
three-bedroom.
seen, George. Why are you doubting me?
Okay, fine.
There's an apartment for 8 million. Speak to me or ask me to introduce it to the person who's selling with this yields.
It's a distress selling. Talking about distress selling, Beatrice, look, we have a problem in the valuation in the market. Typically, you have the standard valuation methodology that you give, that the valuing companies give you, but then there's what the market is asking. So we've seen a lot of property holding companies that are holding property in their balance sheets, moving towards more valuation driven by the cash flows of the property. Like for instance, if this building where we are, which is JKUAT Towers, if you wanted to, your valuation of this building, it will actually be more dependent on the cash flow that it's generating, rather than comparative pricing, which states that you apply a premium above the the last transaction that happened within the vicinity of that building, which is based on feelings, and you know, it's really, there's no methodology in that. But what have we seen in the market is the direction of the market. Is that this feeling sentiment still driving valuations in the market, or there's a methodology that is coming in the market now?
I think I'm really not sure of the standards of valuing buildings yet.
Yeah.
But when you look at the way buildings are valued, most of the time you'll find a building that's valued, and when you go back and do your appraisal, it's very different from what you would value it at.
Yeah.
So I think it depends on the valuation that was done, and most of the time there's that mismatch. Like
Yeah.
whatever I'm appraising it at is not what it's valued at, and there's that disconnect. So I think it's been there in the market,
Yeah.
and then you find a building is actually not being bought because people think it's overvalued.
Yeah.
So I think there's that mismatch.
Do you think
Yeah.
do you think properties are overvalued? And I see the rental yields are very low. Do you think properties are overvalued in your assessment? I mean, you spend days looking at property market. Do you think they're overvalued?
It just
Yeah.
depends
Oh,
on
okay.
what are we valuing exactly. Because
Yeah.
if you're looking at a building, then you look at the small details of that building,
Yeah.
and then you're able to value it. Value it depending on the land price in that area. Value it depending on the construction of that building. So
Yeah.
I think
Okay.
it
Or there's a lot of
varies.
input
So
that goes into it.
yeah, so valuation considers a lot of things.
Okay.
I want to, when you're speaking of valuation, maybe about land, and our graphics team can please put up the final chart on land, because you can see how the land prices have behaved from 2011 up until first half of 2019. It looks like the satellite towns and service land has been the best performer vis-a-vis the Nairobi and Nairobi suburbs. Could you just elaborate what's happening when it comes to land?
So when it comes to land, unserviced land, and mainly in the satellite towns, these are areas outside Nairobi.
Okay.
If you look at the prices of land there compared to Nairobi, it's very different. If you're able to get an acre outside Nairobi at 24 million, come to the CBD and it's 400 million.
Exactly.
You see, so there's higher demand for land in those satellite towns. So as much as it's been appreciating, maybe not as fast as, it's not got to the level of the commercial areas we have or the high-rise areas, because in those areas then land is going for as much as 400 million, 300 million.
Okay.
Yeah, so for satellite towns, the land is still affordable.
Which are your top areas?
Top areas is, we have Utawala, we have Ruiru, we have Ruaka. Those areas have continued to perform well, mainly because of the infrastructure in such areas.
Okay.
They are easily accessible from the CBD or from commercial zones or other business nodes. So people are able to access those areas. You don't have to live in the CBD, but you can actually get land there that's affordable, and you can actually do your homes there. Okay. So land has been performing very well in those areas.
So, which is from your perspective. So, if you're speaking to an investor and you all this work that you have done in real estate, what's the one thing that you tell them to look out for, and where should they put their money when you're talking about real estate overall?
Generally, in real estate, the investment opportunity is mainly outside Nairobi for most of these concepts. If you look at affordable housing, the focus is in outside Nairobi, areas outside Nairobi, that's satellite towns. If you look at the areas that are performing well in terms of retail, it's mainly areas outside Nairobi, county headquarters and all that. So the investment opportunity is mainly outside Nairobi, satellite towns. I think we need to look into those areas more.
But Beatrice, let's talk about rates. I mean, you're talking about heavy initial capital outlay in some of the real estate projects. I mean,
George, I would love we talk about rates, but we have to end the show now. Maybe Beatrice can come back again and we can take a deeper dive on the rates. Yeah, but now I think let's leave it. Satellite towns have the best opportunity. There's more upside on the retail sector, maybe slightly lower risks compared to what's happening with affordable housing. So I think we close the show and we thank you for your watching us. We were streaming live on YouTube. So remember, real estate, you really haven't lost out money. There's some pockets of opportunity out there in Utawala, Ruiru and Ruaka. And Beatrice is available online. You can always talk to her for any more information on real estate. We leave you with the market prices for the stock exchange and the daily commodity price list. See you tomorrow morning. Good evening.